Hello traders and investors, welcome back to the Trend Trader channel. In today's video, I'm going to show you how we find opportunities within the tech sector. We are going to be looking at two tech ETFs and then see where we can find opportunities there. I'm going to start by looking at the index, then diving deeper into those two ETFs. Then we're going to look at some companies that you can buy within the tech sector, companies that have the potential to go up. If you have been following this channel for a while, you will know that we haven't traded tech for a period of time, especially since around October, November 2021. That is because the tech sector around that time was in a somewhat downtrend, even though there were some stronger names, but there were other sectors that were performing better than the tech sector. That is why we decided not to have positions there. Right, so now I would like to ask you guys, those who haven't subscribed, to consider subscribing, and after watching this video, if you enjoyed this content, please consider liking this video and sharing it with as many people as possible so that we can help other people to make informed decisions when it comes to stock picking. So the way that we'll be looking at the stocks, it will be purely based on technical analysis. Most of the fundamentals of these companies are known because these are big companies, big brands that people talk about each and every day. And there's a lot of information surrounding the fundamental analysis of these companies. So in this video, we're just going to be looking at technical analysis and how we use technical analysis to find these opportunities. Let's go to the video. Okay, so we're going to start by looking at the chart of Nasdaq. As you know that Nasdaq is the index that tracks the tech sector. So what we saw in the past is that Nasdaq has been on a nice uptrend for quite some time, but we saw somewhere around the end of 2018 before the beginning of 2019, and then also we saw when there was an announcement that coronavirus was ravaging the world, we saw that they were pulled back below this 200-day exponential moving average, which is our key support level. But what you can learn from this is that every time the price tried to trade below the 200-day exponential moving average, when it recovers, like we saw when it recovered here, it started to trade above this, which gave investors an opportunity to make money from Nasdaq. Same thing that we see here when the price recovered around the March lows and then started to trade above this level. A lot of people made money from different companies within the tech sector, and then the sector, it topped somewhere around October, November 2021. Then it pulled back to this level here, which was the previous breakout level. So when we saw that there was that pullback, we didn't have a position in the tech sector, especially when the company started to trade, Nasdaq started to trade below this key support level. So we've been sitting on the side waiting for Nasdaq to come back and trade above this support level, this key level here once again. So we saw last week that Nasdaq attempted to close above this level. That is why now we have interest in the Nasdaq or in the tech sector. So now we know that the sector itself is somewhat positive. So now we want to start to look for opportunities within this sector. So if you want to trade futures market, you can just trade NDQ or QQQ. It's another ETF that tracks the Nasdaq ETF. It's available, it's from Investco. I believe that ETF, you can find it on Easy Equities, but I know for sure that the ETF is there on eToro for those that use alternative platform. And then there are other ETFs that you can use, the ETFs that we're going to be talking about. So the one that I want to cover is XLK. XLK is from SPDR, as you can see there. it also tracks the technology sector. So just by looking at this ETF, so we took a position in the previous week when it closed above this level. As you can see, we have a stop loss just below this key support level, and at the moment we are just targeting the previous high there of about 175 US dollars. Then we will see if the price of the ETF break above this level, then we can consider adding into our existing position. Again, this XLK ETF is available on eToro. I'm not sure if it is available on Easy Equities, but you can check there just to confirm that it's there, or if it's not there. Even if you don't find it on Easy Equities, there is another ETF that we know that it's available on Easy Equities because we have a position there. It's called a Vanguard Information Tech ETF. The ETF code or the share code is VGT. So this one, we know that it's there on Easy Equities. We've been trading this ETF for a while. We were there when it was rising up, and then we started to exit when it closed below this support level. We didn't even wait for it to close below this key support level. But as you can see here, we see the same thing that we see with the Nasdaq index, and also with the QQQ, the XLK ETF. And then we also see the same thing with VGT. It closed above this level. Even though the amount of volume is not that exciting, we would have preferred that to see a high volume like this one, which is above average volume. But volume is not necessarily a key fact, and you will see why we don't see a large amount of volume with this break out there above this key level. So now that we know that we have an idea that this sector, the technology sector, is on a path of recovery, then that is why we want to try and find opportunities within this particular sector. So before we go there, I just want to show you that if you go to the SPDR website, or you just Google XLK ETF, you will see it will take you to this website. The ETF issuer of XLK is State Street Global Advisors. We know we refer to this, it's SPDR, but we just call it a SPDR ETF. So a brief background on this ETF. We already know that it's a tech ETF. The net asset value is about 158 US dollars, and the asset under management is just about 4.6 billion. And then you can download the fact sheet there, and the prospectus, and the historical distributions, because whenever we invest in ETFs, we also expect to receive distributions from these ETFs that we are holding. So now another piece of information that you can find there. So it just describes that it's a tech ETF. Let's see if I didn't miss anything what is important. Okay, so one thing that I want to point you out is the total expense ratio. It's 0.1%. If you look there at the top, it says that since January they had reduced the TER from 0.12 back to 0.1. In the last year, 2021, I had a position in VGT because VGT has a total expense ratio of 0.1. So in terms of total expense ratio, this was a bit expensive. So they've reduced the expense ratio back to 0.1. So now we need to compare these two ETFs based on other factors, not just on total expense ratio alone. And then as you can see there, in terms of distribution frequency, it distributes each and every quarter there. Just it's the same thing that we see with most ETFs, and it's the same thing that we see with the VGT. The main difference between these two ETFs, if you look at the number of holdings, the SPDR ETF has about 75 holdings compared to the VGT, which has over 300 holdings there. So now before we just go deeper there, let's look at the VGT as it is, what is in there. So we see that VGT has an expense ratio of 0.1. It's a Vanguard ETF. You can get more information if you go to the Vanguard website. So it's a sector that tracks the benchmark that measure the investment return within the IT sector. We already mentioned that. And then in terms of the risk potential, if you are buying shares and ETFs, we already assume that your risk appetite is greater than 3, because most of these things have a risk rate that is close to 5, if not 5. In terms of yield, I don't really pay much attention about this yield. I mean, in America, it's a bit depressing. You rarely see a dividend yield that is greater than 2%, but this is just to give you an indication of how much to expect in terms of distributions relative to the share price or the net asset value. But in this case, VGT has a net asset value of about 414 US dollars. So it's almost 2 times as in terms of the value, the net asset value is 2 times the value of XLK. But remember, this one has more companies. It has about 359 companies compared to the 70 something or so of the XLK. And then the asset under management, it's 55.6 billion. It's a bit bigger compared to XLK. And then the top 10 largest holdings, they make about 60% of the fund. And then here you can see the fund breakdown where they invested. There's application software, different things you can read through this. The one that seems to be the largest is the systems and or systems software, which is about 22% of the fund. And then we have the top 10 list of companies that you can find them. And then if you go to distributions, then you will see how much distributions you can expect to receive based on that small dividend yield. So you can expect to receive about 50 cent or between 50 and 70 cent. Remember, these are US cent, so that's about 7 rand depending on the South African rand USD exchange rate, and that is before tax. So you need to know that that is before the dividend withholding tax. So now let's see what can we find more on the XLK. Just want to see the sectors if they've included the sector there. Okay, so with the top 10 holdings, we see there's Apple, Microsoft, Nvidia, Visa, Mastercard, Broadcom, Cisco, Salesforce, Intel. So I think the main difference between the two is that all the other companies that are listed here, you will see that it's the same companies that in the VGT ETF. The main difference is that XLK has Intel Corporation and Accenture in their top 10 holdings, which reflect the index top holding, because you see Intel and Accenture also included here. And then in terms of industry allocation, you can see that there is software, there is technology and hardware, IT and services, but the biggest one, which is about 32%, is from software. Remember there we saw that 22% in VGT is also into software services as well. So you can see the breakdown. Software makes about 32%, then there is tech hardware, which is about 25%, semiconductors 21%, IT services about 15%, and then there's a breakdown. Again, you can get the fact sheet, and then the prospectus, and also the ETF historical distributions. I expect them to have a similar distribution. The problem with SPDR, once you click ETF historical, it does not take you to direct XLK distributions, but you have to browse through until you find XLK. So I won't go to that at this moment. Then when you look at the top 10 ETFs of the VGT, I mentioned that the only difference is that this one does not have Intel and Accenture. We know Accenture, it's a tech consulting company, but all the other ones like Apple, Microsoft, Nvidia, Visa, and everything else is there within this particular sector. So if you go back to the chart of VGT, we've already mentioned that it closed above the key support or resistance level there. So we expect the price to continue to push further up. So now let's look at the individual companies and try to find opportunities within those individual companies. So for Apple, it's an obvious company. A lot of people, they have a position, but a lot of people will also include ourselves there. We've shared on Twitter that we had a position. Okay, we shared Tesla, but we also have a position on Apple as well when it closed above this level here in the past 2 weeks. Then we took that long position. So far the long position is working in our favor. Similar to VGT, we are targeting the previous high of about 183 US dollars per share. But then again, if it closes above this level, we already have a buy stop order above 181, so that if the share price continue to move up, then we do have a position that will take us to continue the journey with Apple. We know Apple, they sell great product, and they're also sitting at about 200 billion in terms of cash. If you like the cash that Thungela is sitting on, Thungela Resources, you are also going to like the cash that Apple is sitting on. So we've been trading this. Every time there's a breakout, we do buy Apple. Every time there's a breakout, we do buy Apple. We just don't buy Apple when it's on the path to a pullback. We do not believe in buying the dip or adding into a losing position. So now we already have a position on Apple. It's currently on profit, and we're also expecting Apple to trade above 181 US dollars. Then we can add onto our existing position. And then the second company which we also have in our eToro portfolio is Microsoft. So we saw the similar chart pattern from Microsoft. Well, I guess my internet is slow, why it's taking longer to load. But we also have a position on Microsoft, and with Microsoft we're expecting the same thing, that it is moving up, and that's the whole reason why we bought Microsoft as well. Okay, so I will just show you on the chart. As I mentioned, similar to Apple, it's been moving upside. As you see, same thing around 2019, just before the end of 2019 and March, we saw that there were those two dips in the tech sectors, and then following those dips, the companies, they just pushed further up there. So we didn't have Microsoft in the previous years. So when we saw this dip here, we're just eagerly waiting for this stock to close above this key resistance level so that you can start building a position. So we bought Microsoft somewhere around, let me see what was the price. I think it was somewhere around 300 US dollars per share, and at this moment we're just waiting for Microsoft to start trading above this level, which is about 304 US dollars. Then we're going to add into our position. Again, in the short term, we just want to see Microsoft pushing all the way up to about 340 US dollars there. That will be a nice swing trade, and then if it starts to trade above 341, we will have a long-term position that we will use to continue to participate in the success of Microsoft. That is if they plan to continue to remain profitable and successful. Nvidia, we didn't have a chance to get a position because it just moved up too quick, and then we weren't able to get a position there. So I'm using Trading View to do the chart. I'm using free Trading View. That is why it keeps on pushing those ads there. But I mean, it's still usable. All you have to do is to keep on closing those ads as they come. So same thing with Nvidia. When we saw this breakout here, the breakout happened around 220, then it pushed all the way to about 340 before pulling back to this support level, the dynamic support level. It never really traded below the 200-day moving average for a long time, because we saw that when it attempted to come back here the following week, the buyers pushed the price back to 240 and to 260. That happened so quick. Ideally, we would have wanted to buy just as near this resistance level as possible. So we ended up missing Nvidia Corporation because we do not have the position this stock in our portfolio yet. If we were to buy, we would want to have our stop somewhere here. So that's about 220, 225, and the current share price is about 276. So that will be a $50 risk that we would be taking. So we prefer to sit on the sideline and not to buy it, and then wait for Nvidia to come to this level about 320, and then set a buy stop order so that if it tries to trade above, then we can easily get a position there, and then we'll be able to set a stop loss just below 320, because we prefer that to have a reasonable risk to reward. We do not believe in chasing stocks. There are a lot of opportunities there in the market. There is no need for us to chase one name. And then the other company that is there is Visa. We also we checked the chart of Visa. Visa does look a bit attractive, even though there's nothing explosive. It's not that volatile. Remember, guys, we are not just investors. Our investing approach involves trading, so we are really interested in volatility. We prefer stuff that are volatile. I know that there are people, Warren Buffett proteges, that prefer to make their money slow. For us, if there's an opportunity to make a quick cash, we just want to go with that opportunity. We don't like dead money that is sitting in there. Even though these companies, they pay dividend, but if there are better opportunities somewhere, we can buy. But then again, we're not saying that Visa is not offering an opportunity. We can buy at the current level and either set the stop just below the last week candle there around 210, or if you want to give it a bit of a room to breathe, you can set a stop loss behind the recent week low of about 190. And then obviously the short-term target will be somewhere around 250. And then if you want to hold the position long-term, then you can just buy at the current level there, because it's trading near a key support level, and then you'll be expecting that price to continue to push further up. So now let's look at another company, which is MasterCard. Both Visa and MasterCard are companies that are used for paying system. We see the same setup. The only thing that is missing with MasterCard at the moment, it is not trading above this key support level, and the share price of MasterCard, it's about 349 compared to the share price, which is lower for Visa. And then we will make a video to explain what do you do in such a situation whereby you are looking at companies within the same sector and one company is leading. How do you approach that scenario? So for MasterCard at this moment, there's nothing interesting. We wouldn't be looking at adding MasterCard. Broadcom, it had a nice week last week. We saw it pushing a really nice up, but we didn't have a position. So if you look at Broadcom, it was one of those strong companies. It actually never traded below this support level, even though the other tech companies were pushing lower. So what we do when you see in a situation like this, we expect the company that didn't trade below a key level to become a leader when the stock market recover. So we will be buying bits and pieces of Broadcom. You can see the share price is 628 US dollars. If you're using a platform where you can buy fractional shares, you don't really worry much about the price that you are paying, unless you consider yourself a value investor and you can do some magic to reach a conclusion whether the stock is overvalued or undervalued. For us market technicians, we just use the chart. What we expect is that the share price is going to break above 608 US dollars and then continue to trade higher. Obviously, nothing is guaranteed in the market. That is why we always have a stop loss. We will never take a position without a stop loss, because that's the easy way to ruin your life. Because now, even if you're not losing your money, remember, some people, they console themselves that you only lose when you sell. But during that period when you're holding on to a losing company, how do you feel about it? Let's look at the chart of Cisco. Cisco was one of the companies that did well during the tech bubble in the early 2000s. I don't know how old are you, but I was just a kid. I didn't even know that there was something called the stock market. The chart of Cisco at this moment, it's not that attractive. It's still stuck in this limbo here. So for what we see here is that there are going to be two scenarios. If it trades above this level, above 56, then we might be interested in this particular position. But if it fails and then it trades below $52, then obviously it will mean that the lower price movement is still there. So we wouldn't want to have this position in our portfolio. And also, there are better companies, so there's no need for us to have an interest in a single stock. Then Adobe had a horrible week. Last week we saw that it crashed similar to Naspers, but Naspers and Process, those ones had the worst weeks in the JSE. So you can see that even the volume there was pretty much announced. It was a lot of volume pushing the price high. So at this moment we are looking to see if Adobe is going to manage to stay above 420, 410 US dollars. But if it closes below that, then we expect it to continue to go lower. Remember, we don't care that it's a good company, whether you guys are buying Adobe After Effects or all the Adobe product. It doesn't mean anything to us. As long as the share price is showing weakness, then we don't have interest in buying that particular name. Okay. So let's look at the last few companies there. So here we have Salesforce and AMD. Maybe let's start with AMD, even though it's below Salesforce. But AMD, it's a semiconductor company, and well, we are probably biased because this one quickly came back to this level. What you see here, it started to trade above the 200-day moving average, just the way we like it. It had this support level. Remember, this was the previous resistance level, which then became support, but the share price broke below the 200-day moving average, and then it found support from the previous resistance level. So we would be happy to buy AMD at the current level. For a short-term trade, we'll be targeting 160 per share, and then we can have our stop loss just below the 200-day moving average, somewhere around 110. So that will be about a $10 risk that we will be taking. Then from 120 to about 160, that is going to about $40. So we're taking a risk to reward of 1:4. Remember, we always say that we don't want to take a position whereby the risk to reward is less than 1:2, because with 1:2 we can be wrong 50% of the time, but we can still make money. It's okay if you don't understand the concept of risk to reward yet, but it's a concept that works. We know that it works. So let's look at the chart of Salesforce and see what's there. Okay, so the share code of Salesforce is CRM. It's also trading below the key moving average, so we're not interested in this company. It doesn't matter what they do. We're only going to be interested once it starts to trade somewhere around 240 US dollars. So we saw with XLK, they also have Intel. So let's look at the chart of Intel. Wow, I don't know the share code of Intel. So it's INTC. Right, so for us, there's nothing to like about this company. It's just moving sideways. We saw that AMD has a better chart, so there's no need for us to consider buying Intel. If we want to have exposure in the semiconductor, we can just focus on AMD. Let me look at the last company that was there. Okay, is Accenture. Let's see. Bafethu isingisi akusona sethu, as long as you understand what I'm trying to say. Okay, we see ACN, it's also struggling to stay above this level. So once ACN starts to trade above, let's see, maybe about 330 US dollars, then we can then consider buying ACN, and then we can either have a stop somewhere around 320, or if we want to be a bit lenient, we can have a stop somewhere around 300 US dollars, then targeting this 400 to 410 thing there. But then again, you already saw that there are better setups from Apple, AMD, Visa. We saw a better setup with Visa. I just want to go back to the names to see where we saw better setups. So we saw that there are better setups from Apple, Microsoft, Nvidia, Visa, Broadcom, and okay, Salesforce. We said we don't like Salesforce, and then AMD. So now what we're trying to say is that there is no need to try and fight the market or try to fight the tape. Just get the opportunities where the opportunities are coming, and that's what we'll be doing in this next coming week, as we will be trading the tech sector. We're just going to be looking at those companies that are giving us better setups, and we don't want to own all the 390 something tech companies or all the 79 tech companies. If you can just pick 2, 3, 4 companies and then supplement your position with an ETF, we've already illustrated that the QQQ or the QQQ Invest Core ETF is bullish. The XLK ETF is bullish, the VGT ETF is bullish, and also Nasdaq itself is bullish. So we can just buy a couple of those companies, 3 or 4 companies. Remember, there are so many sectors that you can invest in, so you do not want your capital to be concentrated in one particular sector, because if that sector at some point it struggles, then it means that your portfolio, because it's heavily relying on that particular sector, it's also going to experience some challenges. Okay, so that's all that we wanted to share with you today in this Trend Trader channel. If you enjoyed this technical analysis session and finding opportunity session, please give this video a thumbs up. If you haven't subscribed to the channel, please consider subscribing, and we encourage you to share this video with as many people as possible, people that might be interested in buying these tech companies. Okay, so that's it for today. Forgive us for only sharing the US companies. That's because our JSE portfolio is already fully invested. There aren't a lot of companies that caught our attention in the last week. We took a new position in TFG, the Fortune Group. The position is working. We are happy with it. We saw that Naspers and Process were struggling. We've tweeted about it in our tweet. If you go to Twitter, you'll find our Twitter handle is Trend Trader JSE. Then you can follow us on Twitter as well. We comment a lot on charts. And let's see which other company that had our interest. Okay, we've already spoke about TFG. We saw that Tungela came up with that nice dividend. People are happy about the dividend that they will be receiving. Some companies, they decided not to declare dividend. We spoke about Merafe. Merafe hasn't traded above R2 per share. We are waiting for that a company to start trading above R2 per share, so that you can then take our position. If you already have a position on Merafe, you've got nothing to worry about at this moment. But once trade above R2 per share, it just tells us based on the chart that it's above a certain resistance level, because if you buy now somewhere around or below R2, it can still go lower, because we are at a historical resistance level. There's nothing wrong with the company. It's just based on the chart. And there are so many other companies that we covered. We made a video whereby we were talking about, let me try to find that video for you guys. So in that video, we were talking about okay, we spoke about the repo rate. If you haven't seen that video, go to our YouTube channel. You will see the comment regarding the dividend, not the dividend. I would appreciate it if they had increased the dividend. They were increasing the lending rate by 0.25% or 25 basis point. And then last week we opened the week by talking about Naspers and Process that they are dragging the JSE lower, and we saw that when Tencent released those results, some market participants were not happy with the result, and then they started selling Tencent, but also local people started selling Naspers and Process. But we took position in the US in John Deere and Chubb. Those positions in profit as we speak. So go check that video there and see what we said about that those companies. And then we also had some live sessions whereby we discussed different companies. So do spend some time browsing our YouTube channel, because we do have a lot of content that we believe it can help you to make an informed decision in the stock market. So for today, I'm just gonna wrap it up here. Once again, if you haven't subscribed, please consider subscribing. I will see you in the next video.